Welcome back to our series on dividend investing for beginners. In Part 1, we covered the basics of dividend investing and the first 5 steps to get started. Now in Part 2, we'll dive deeper into the research process and share some tips on how to select the right dividend stocks for your portfolio. Let's get started. When it comes to selecting dividend stocks, it's important to do your research and make informed decisions. Here are some key factors to consider. The dividend yield is the ratio of the annual dividend payment to the stock's current market price. It's an important indicator of how much income you can potentially earn from your investment. Look for stocks with a consistent and sustainable dividend yield that aligns with your investment goals. It's important to strike a balance between a high dividend yield and a sustainable one. A high dividend yield may be attractive, but it could also indicate a company in financial distress or a dividend that is not sustainable in the long run. So be cautious and look for stocks with a reasonable and consistent dividend yield. Dividend history. Look for companies with a history of paying dividends consistently over time. A company with a long track record of increasing dividends or maintaining stable dividends is often a good sign of financial strength and management's commitment to rewarding shareholders. Companies that have a history of consistent dividend payments are more likely to continue doing so in the future. It's a sign of stability and financial strength, which can be appealing to dividend investors. Financial health of the company. Analyze the company's financial statements, such as its balance sheet, income statement, and cash flow statement, to assess its financial health. Look for companies with low debt levels, strong cash flow, and sustainable earnings growth. A financially healthy company is more likely to have the resources to continue paying dividends. It's important to have a good understanding of the company's financials to assess its stability and ability to continue paying dividends. Make sure to research and analyze the company's financial health thoroughly before making any investment decisions. Industry and market trends. Consider the industry and market trends that may impact the company's performance and dividend payments. Look for companies operating in industries with a favorable outlook and potential for growth. Understanding the broader market trends and economic conditions can help you make informed decisions about the stability and growth prospects of the company's dividends. Keeping an eye on the industry and market trends can help you identify companies that are well-positioned for growth and may offer attractive dividends in the long run. It's important to have a forward-looking perspective when evaluating dividend stocks. Management quality. Evaluate the quality and track record of the company's management team. Look for companies with experienced and competent management that have a history of making shareholder-friendly decisions, including dividend payments and capital allocation. The quality of the company's management team is a crucial factor in its long-term success and ability to generate consistent dividends. Do your research on the company's management, their track record, and corporate governance practices to assess their competence and commitment to shareholders. So there you have it. These are some key factors to consider when researching and selecting dividend stocks for your portfolio. Remember to thoroughly analyze the company's dividend yield, dividend history, financial health, industry and market trends, and management quality. Doing your research and making informed decisions can greatly increase your chances of building a successful dividend portfolio. To recap, in Part 2, we covered important factors to consider when selecting dividend stocks, including dividend yield, dividend history, the financial health of the company, industry and market trends, and management quality. By thoroughly researching and analyzing these factors, you can make informed decisions and build a strong dividend portfolio. That's it for Part 2 of our series on dividend investing for beginners. Stay tuned for Part 3, where we'll discuss how to diversify your dividend portfolio and manage your investments effectively. Don't forget to subscribe to our channel and hit the bell icon to be notified of our upcoming videos.